What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto. That's like C-Zar, right? Because my first name starts with the C, and I am your czar. I am your king. And Caesar. Caesar is also king. If you haven't picked up on it by now, that's the whole reasoning behind it. Anyways, that might be the only time I ever explain it, unless someone really asks me. Anyways, we're not here to talk about my name. We're here to talk about Bitcoin. I just made a video on Bitcoin talking about my projections and why I think we are in a bearish position, why we might see a decline in price, why there's on socials, at least on Twitter, and on the Crypto Fear and Greed Index. On the Crypto Fear and Greed Index, things are neutral. On Twitter, there's a 5-to-1, just a rough ratio of bulls to bears. There are a lot more bulls than there are bears, even if that ratio is not accurate, even if it's 2-to-1. I went through for about 10 or 15 minutes just going through that, and that's my last video. This video, though, I want to talk about something that I've talked about before, that I haven't talked about in a long time, and that is Elliott wave theory. We're on the weekly time frame. I think it's a perfect thing to look at. If we have our Elliott wave tool drawn up, this is our first wave. This is how you measure it, right? And I'll go over all the aspects, the fundamental, the technical aspects of how you would do this. But I'm going to just draw it: wave 1 down, wave 2 up, wave 3 down, wave 4 up, wave 5 down. Okay, you can see it, right? This is what I'm talking about. And now, I believe we are experiencing a 1, 2, 3-legged move up, a correction is what I think we're experiencing. And there doesn't need to be 5. Anyways, I'm gonna delete this now. Actually, I'll keep this here. If you go to ElliottWaveForecast.com, there's a bunch of different websites. You can look it up on other websites. Everything kind of has its own variation, but this is all typical, right? There's nothing that has to be. You do want it to be textbook. It says typically, and yes, there are always exceptions, but typically I would say this is a textbook example of an Elliott wave. So at least a 5-legged impulse wave, right? Is that impulse extension? I don't know. Yeah. Anyways, wave 2 is typically 50%, 61.8%, 76 blah 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 of wave 1. What does that mean? Well, if we draw from the top to the bottom, this is wave 1, right? You can see it 0 to 1. This is wave 1. Wave 2 went directly to the 50. This green line, you can't see it here. Let me try and make it a little bit more visible, maybe. It says 0.5. You can see it right there, 0.5. It's the 50. If we look back, wave 2 is typically 50%, blah, blah, blah. It's one of these. And it was 50% of wave 1. That was wave 2. Wave 2 was 50%. Wave 3 is typically 1618 of wave 1. Okay. So 1618 of wave 1. How you would measure that? Would be basically you take this, because this is from the bottom of wave 1, the extension off of wave 1 to wave 2. We've got a 2618 extension down. If we look at it, it says typically 161. Man, they changed it. It used to be 2618. Maybe okay, here it is. That's what it was. It was a different. This is an impulse wave, where this was more of a. What was this? I don't know. Something else, I guess. Still the same thing. If we look at the fibs, wave 2 is 50%, but this one, wave 3, is 200 or 2618% of waves 1 to 2. That's where I'm getting this from, right? From wave 1 to 2, this extension is 2618. You can to the T. This top to the T was a 50% move. This one to the T is a 2618 move. Can't make this up. That's literally what happened. This is how you measure it. And I called this, once we were at wave 2, or maybe we were at wave 3, this is when I discovered that we were in this pattern. I think we were in wave 2. We might have been down here, and I discovered this before, maybe like halfway through the wave. But that's, you can go check that yourself. That's not what I'm really trying to talk about. Wave 3 clearly is a valid wave 3. Wave 4 now, what are the qualifications for wave 4? Wave 4 is 14% blah 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 of wave 3, but no more than 50% in bold letters. Basically, this is saying it's, you know, yada yada yada. It's a small correction, but it's no more than 50%. No more than 50%. That's the main rules. It can't be more than 50%. And that's what they call these. This is an impulse down. This is a consolidation or a correction. Impulse down, consolidation, correction, impulse down. So wave 4 can be no more than 50% of wave 3. So we're measuring from top to bottom. This is wave 3 here. It went right up to the 382. It didn't quite hit the 382, but it is below the 0.5, and normally it doesn't say this on here, but normally wave 4, you know, it doesn't overlap the price territory of wave 1. It's normally the smallest wave. Wave 1, wave 4, or wave 2, they're normally the smallest waves. And they are. They're definitely the smallest waves. Wave 3 or wave 5 are normally the biggest waves. It's actually very uncommon to see a wave 5 that is smaller than wave 1, which I think this is smaller than wave 1, but it's not impossible. And just to validate that wave 5, let's see, there are 3 different ways to measure wave 5. First, wave 5 is an inverse blah 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 of wave 4. Second, wave 5 is equal to 1/3, or is equal to wave 1. Third, wave 5 is 61.8% of wave 1 to 3. So let's just do the first one. Inverse 1236 to 1618. It's in between this of retracement of wave 4. So basically, if we click, we do our extension, right, of wave 4 right here, we can see that wave 5, sorry, that's not the actual top. Here's the top. There you go. Wave 5 went in between. Here's 1272. Here's the 1618. It went in between the 1236. The 1272 is what I use, but it went in between the 1236 and the 1618. It went in between both of those. So that's a valid wave 5. And when wave 5 happens, that's it. That's the gist of your Elliott wave. That this is a valid Elliott wave. Okay? And I called this, like I said, sometime around here. It gave me a very clear kind of motion all the way down through the market. It made me expect a downtrend after this little pump here, continuing to go lower on these pumps. You know, I expected all that. When we got down here, I definitely thought we were going lower. I wasn't right on the bottom. I would have been right if I stuck to my game plan, if I realized that this was enough. In one of my videos, I even said that this does meet the qualifications for a wave 5, but I think we're going lower. I got greedy to the downside. You know, I wanted it to go lower, and I missed it, and we went all the way up here. But now that that's out of the way, let's check out, let's see if we can find, I wonder, I don't know, it says wave personality, ending diagonal, let's see, motive sequence, zigzag, wave 3, wave 2, wave 1 and 2. Yeah, I don't know. Let's go to the index. Maybe they got a glossary here for me. So let's see. Motive waves, Fibonacci introduction, motive waves, impulse with extension, leading diagonal, ending diagonal, motive sequence, Elliott waves, Elliott wave 1 and 2, Elliott wave 3, corrective waves, the zigzag. This sounds about right to me. Yeah, the zigzag. So let's go to that. Okay, zigzag, corrective wave. You can see here, and yes, it's got a 1, 2, 3, 4, 5 down, a B, C up, a 1, 2, 3, 4, 5 down. This actually really fits into the whole thing. Like we've got a zigzag. We've got a 1, 2, 3, 4, 5 down, right? It's a 1, 2, 3, 4, 5. Oh, sorry, 4, 5. Sorry, 1, 2, 3, 4, 5 down. 1, 2, 3, 4, 5 down. An ABC correction, right? Where is it? Where is it? There it is. Elliott correction wave. We've got an ABC correction. And if this is to play out, if this is a zigzag, if this is a total, what it's trying to say is that the way to look at it without all these lines is that you have a, I'm going to change the color of this line, but it's going to be a zigzag, right? I'll make it stand out more, make it white. A grand total of a zigzag. I know I got a lot of lines on here, but just try to bear with me. What this is saying, what this is indicating is we have another 1, 2, 3, 4, 5 down. And if you look, the fourth wave is just a little bit lower than the fifth wave, but the fifth wave is noticeably lower than the fourth wave. And we could see that. We could see that. It wouldn't take much, to confirm that Bitcoin wouldn't have to go down to like 9,000. It could go down to like 13,000 and still confirm this kind of pattern. Basically, what something like this, the zigzag, is calling for, after this would be another, I'm going to put the magnet back on, another one, I guess, let's see actually. The 1 would be tied with that, so we would be like something like this. It'd be like a 1, a 2, a 3, a 4, and then a 5, right? 1, 2, 3, is that? Okay, so that's 3, that would be below. So actually, 3 would be just maybe there, 4, and then 5. And that, 5 could go lower. The 4 might not be that high. It might be something more like this. That looks a little bit better from a structure point. We could see something like this. And the thing is that I don't think anybody would expect this, because for a pattern like this to play out, especially with the way that we're on a weekly time frame, with how long it's taken for all these to form, I mean, even if we condensed this and made it look a little bit wonky, even if we condense this, and not super condensed, it could look just like this, and it might not even go that low. Maybe let's say it goes just a little bit lower, whatever. This is in December of this year. Maybe it ends in, whenever I had it before, this would be ending in the beginning of 2024. Nobody would expect this, because that is extremely close to the halving date. It's extremely close to the halving date. The halving date's in April of 2024. April, May, somewhere in there. And I think the fallacy, the farce, is that Bitcoin has to bottom a year out from the halving. We're about a year out from the halving now, so there's no way that something like this could happen. But we are in a world economic state of conditions that Bitcoin's never experienced before. And I don't care what everybody, I love Bitcoin, man. I think it is the future. I think it's a financial vehicle. It's a safe haven for wealth. It really is. But it has never experienced a world recession before, and no asset is safe in a world recession. It's very hard to find any assets that are safe. Hard cash is the only thing that's safe historically in a recession, and even that with high inflation isn't good. But we're not talking about that. I'm talking about, what I want to talk about is the potential that we are seeing a zigzag, a corrective wave. And that's what this is, right? It's a zigzag. It is a corrective wave. We go all the way back to the top at the index. Corrective waves, zigzag. And you might be saying, well, this isn't a corrective wave. This is just bearish. Oh man, I had a little vibration there. I'm sorry, that was probably loud. I don't have my equipment set up, so you're kind of like positioned precariously. If it vibrates, my phone falls. I'm gonna make this video quick so that none of that happens again. But what I'm trying to say is this is a corrective move. If we zoom out to the monthly, in the grand scheme of all these bullish moves, I'll just kind of take that away. If Bitcoin was to come down here, you could say, like, it's just very obvious. This is a corrective move. 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 Even if it came all the way down, it could come all the way down here. It's still a corrective move on the grand scheme of Bitcoin going up. Bitcoin's on an upward trajectory. Any downward move is a corrective move, and that's exactly what we have here. And the thing is that this formation has followed the zigzag to a T. We literally measured everything going down, the 1, 2, 3, 4, 5 going down. It hit it perfectly. It fit every definition to a T. Let's see if we can find the correction. So Fibonacci relationship ratio, wave B wave B equals 50%, 71, 85.4% of wave A. So this is wave B from A to B here. There's A, B, C in here. That's the corrective wave of the total general correction wave. They do 1, 2, 3, 4, 5 for down, A, B, C for up. That's just how you do it. If this is too much to follow, just bear with me here. I'm going to go over it, I swear. Wave B, this wave, is 50%, 618, 764, or 8854 of wave A. So let's measure that. Wave A. And we identified this as our potential wave A. You know what? I'm going to delete all this stuff. We're going to delete all the noise. We're going to remeasure it again from the top to the low. Here's our wave A. And that just failed to hit the 50%. It doesn't have to be precise. It's nice when it's precise, but wave B, I would say that this is basically a 50% move up to wave B. I would call that a wave B move. Let's see, I don't know, BTC USD on we're on the index. Let's go to Binance, see if it is closer. I doubt it is, because those are pretty close together. Yeah, you know, it's close enough to the 50 where I would call this a very weak wave B, which indicates that we are, you know, potentially in a and we're below the 382, which is also bearish. We've come up and we're testing it as resistance. We haven't broken above it. That's bearish. We are gaining price right now. The week has a lot of time. The way that we would invalidate this basically would be if we got above this high here. If we can get above this high, that would make it a 1, 2, 3, 4, 5 count. That's not something that we see in this zigzag kind of pattern. You don't see a 1, 2, 3, 4, 5 coming out of a 1, 2, 3, 4, 5. That's really not. It's a 1, 2, 3, 4, 5 to a 1, 2, 3, back to a 1, 2, 3, 4, 5. Generally. Anyways, I would count this honestly, and we're gonna observe it as it goes down. We're gonna see if we have another 5 legs down, and that's basically all I wanted to put on your radar, is that we could be in an extended bear market, and hell yes, this bear market can go on until 2024. Hell yes, it can. Anyone who's telling you that it can't, they are, you know, they're going off of things that we've done historically, which is the fact that Bitcoin has always bottomed previously to, or like a year out from its halving date. It's always bottomed a year out from its halving date. The camera looks a little bit milky. I don't know. And you know, I feel like that's a safe assumption to make. I feel like I understand where people are coming from. But we're doing things in this market that we've never done before. We really are. And we're in economic conditions that we've just never been in before. So that's really the last of it. That's all I got to say. If you enjoyed this video, leave a like, subscribe, hit the bell icon if you want to be notified when more videos come out, and leave a comment if you have any feedback, any negative things to say, any positive things to say. Even if you hate the video and you don't want to see me, like the video, leave a subscribe. And I hope you all have a good day. Take care. Be safe. I will monitor this as it goes on, and the way to invalidate this potential 5 legs down, we basically need to get back above 31,000. We get above 31,000, there's no denying it that this is a incorrect assumption of the market. Even though this was all correct, even though this is pretty true to the idea that we're going for, it would invalidate it if we went up. That's all I got. Take care. Be safe. Happy Lalo's Pizza Day. Bye-bye.